Hey guys, and welcome back to the classroom. So in this lesson, we're going to continue with Forex Basics Technical Analysis. We're going to focus a little bit more on candlesticks, the Japanese candlesticks, and a little bit of the candle patterns, right? So that's what this lesson is going to be about. If you have not watched just lesson 3, the first basics, technical basics, technical analysis basics lesson, please watch that first and then come back and watch this one. And this also does not have a study guide with it, okay? So because most of the information you're going to need is going to be on the previous lessons anyway. Definitely take the time to read the disclaimer. Just pause the video, read the disclaimer, and then move on to the next section. So again, get your notebooks out and take notes. We do not have a study guide pre-quiz for this particular lesson, but write down any question that you have for any of the live Q&A sessions that we have. So again, this is the intro to this section is introduction to Japanese candlesticks. Okay, again, this is a Forex technical analysis basics lesson.
Hello, welcome to Intro to Forex or Intro to Forex Trading 101. So the first thing we're going to talk about today are the candles and market structure. We're going to keep it very simple, very short video. Candles, we have green candles and red candles on our chart, naturally. Green candles are bullish candles, and they are going long or they're going up, as you can see here. Red candles are bearish candles. They're going down and they're selling, as you can see here. Bullish candles open at the bottom. They close at the top. All right, that's a bullish candle. And let me change this template really quick. All right. That's what a bullish candle looks like. It opens at the bottom. This is the opening price. And then buyers push it up and it closes here. Now, if we look at the top of this candle, we have what's called a wick. Okay. The wick is where price went up as high as it got. But when price came down, it closed. I'm talking about this candle right here. Okay, so it opened here, prices pushed up, it went all the way up here, reached this high, then it came back here and it closed. Okay, that's the anatomy of a bullish candle. All right, let me say this again. Here we have open. All right, this is the open price. Okay, on this candle. Then here we have the closing price on this candle. Right. Let's make this middle. All right. Can't really see it, I know. Let me do this so we can see like a little bit better. There we go. Open price, close price, okay? Then we have the high, as you can see, the tip of this candle. This is the highest price. We call it the high, right? And actually, because there's no wick down here, this is the low of the candle as well. So there are 4 prices, okay? And if you hover over this candle, you'll see O for open, H for high, which is that one. You can actually double click on this if you need to and change the coordinates to match the high, which is it is. L for low. If you notice, the low and the closing price is the same because it's the same point. This is the low. And C for closing price, okay? And that's what we have here. You can see all those numbers here. Let's go look at another candle, but let's actually get the wicks involved. Okay, there we go. So now let's look at this one. So I told you guys that price opens here. This one closed. This bullish candle open. Then we have price when it opened, it looks like it pulled back because that's normally what it does. So price pulled back and came down and made a low. Okay, so we're going to call this the low price or the lowest price. And I'm looking up here to get that number, which is the low. Okay, we're going to call this the lowest price, right? Or we call it the low of the candle. All right, then we have See if I can go up and get my thing already made it. So let's go grade it. Then we see that price actually came up. The first thing it does is opens, pulls back usually, and gives you a low. Then a lot of times it goes up, straight up, and gives you a high because it's not going to close yet. That's the last thing it does. So it gives you this high price here, which you know is 1.08114. So I'm actually going to do this, put it right there. You don't have to do that, but I'm doing that. And then we have, and then we have the price that it closed at. And the closing price, why can I grab it? It's this one. Here we go. This is where it closed at. We see that dotted line. It closed at that price, which is 1.08112. So this is the price. This is the anatomy of a bullish candle. It opens, close. First it opens, it creates a low. It pushes up, usually creates a high, and it comes back down and closes at this price. So whenever it closes at this price, the new candle is going to open at this price. So the very next candle opened at this price. Okay, this is the opening of that candle. It went down and made a low. This candle went up and made a high, and it came back and closed pretty much at the same price. Very same price. The open and close of this candle at the same price. Okay, so this is a bullish candle, a huge bullish candle right here. This is more like a doji. It pretty much open and closes at the same price. Okay. In the next video, I'm going to show you the anatomy of a bearish candle. See you in the next lesson. Hello, welcome to
And of course, I will break it
Intro to
down a little
Forex or
bit
Intro
more,
to
just a little
Forex
bit more
Trading
after this next video.
101. Hello, welcome back to part 2 in the Intro to Candles section of this Intro to Forex Trading 101 lesson. So we talked about the anatomy of a bullish candle in the previous lesson. Now we're going to talk about the anatomy of a bearish candle. Okay, so the bearish candle also has an open price, a closed price. It has a high price and a low price. Okay, except bearish candles do not go from the open from the bottom and go up. Bearish candles open from the top and go down. Okay, so bearish candles look like this. They're the opposite, like this one. It opens from the top and it goes down. We call that a bearish candle. Okay, this is a bearish candle. So now let's talk about the anatomy of this candle. All right. So like I said, it opens here. So this is the open price. Because it opens at the top. When this one closes, this one opens. At the close, one candle closes, the other one opens at that price. So the open price here of this bearish candle, I'm going to just turn it all red so we know we're looking at a bearish candle. All right. And we're going to do it like this so we can, there we go. So this is the open price of this bearish candle. Okay. Now we're going to go grab, I'm just going to go grab it. We have the open price, then we have the low price. So what happens is price opens and then it goes up, actually makes a high price. Okay. So we're going to do the highest price here. You go grab that. This is the high of that candle. Okay. Then it comes, so it opened, it came up and made this high, it came back down, usually pushes all the way down and makes the low. All right, so we have the lowest price down here of this candle. And then finally it comes back and it closes right here on these dotted lines. So this would be the close price of the candle. So it's the exact opposite, pretty much. The bullish candle opens here, makes a low, pushes up, makes a high, and closes. The bearish candle opens at the same close, part where this one closed, and it pushes down. Okay, and and then makes a low. I'm sorry, guys. In this case, it pushed up, made a high, and then pushed down. So this is the anatomy of a bearish candle. Take the picture, okay, and let me put in here the words anatomy of a bearish candle. Anatomy anatomy of a bearish candle, right? And the other one was anatomy of a bullish candle, right? So screenshot. Okay. I'm also going to take a screenshot. Now let me open a new tab. Here we go. So I took a screenshot of that, and I'm going to undo so we can get the same wording. So you can guys take a screenshot of the other one. Give me a second, guys. Now you can take a screenshot of this one. This is the anatomy of a bullish candle. All right. So that opens, makes a low, makes a high, and closes. All right. Okay. Next video, we're going to put the candles together and talk about market structure. All right. See you guys in the next video. Hello, welcome back to part 2 in the
So
intro
the
to
next video will actually
candles
be in a
section
future
of this
lesson.
intro to forex
You
trading
guys who
101
were
lesson.
live with
So
us
we talked
when
about the anatomy of a bullish candle in the
Sunday
previous lesson. Now
night,
we're going to
February
talk about the
18th,
anatomy of a
you
bearish
guys,
candle.
we went
Okay,
over market
so
structure
the
in
bearish
depth,
candle
but
also
I've
has
told
an
you guys I'm
open
going to
price, a
create a
closed
separate video for
price.
you
It has a
anyway,
high
so that'll
price
be
and a low
coming
price.
soon.
Okay,
But let's talk about these candles again. Let me slow it down a little bit. So a bullish candle is an increasing candle, right? It's green usually, and on at least on our trading view charts. And then it opens at the bottom. When we say this right here is the bottom, it opens here and it closes at the top, right? So if the close is higher than the open, if it goes like this, and so this starts at lower prices and ends at higher prices, that is a bullish candlestick. Okay. Bearish candlestick is the opposite. If it starts at higher prices and it pushes down and closes here, if this candle finishes at a lower price than when it opened, it is a bearish candle, right? It's decreasing in prices. This is increases in prices. They both have the same high, right? So the high is the top of the candle, right? That's the highest price that price got to, the market got to in this candle in this session, and this is the lowest that's at the bottom, right? The lowest at the bottom. So the wick at the top and the wick at the bottom are all the same on both candlesticks. The only difference is whether price was increasing in this stick or this time frame or this candle, or decreasing, right? If it's decreasing, then the close is below the open and it's bearish. If it's increasing, then the close is above the open, right? And it's bullish. Now let's talk about different candlestick patterns, right? So this is a spinning top, right? So this is a Japanese candlestick with a long upper shadow and a long lower shadow, or a long upper wick and a long lower wick, right? But they have small bodies. Like the real body is very small and it's called a spinning top. Think of it as a spinning top, right? And really the color of the body is not that important because this pattern indicates indecision between the buyers and the sellers, right? There's indecision here, right? The small real body, whether it is, black or white or black or green or red or whatever it is, or hollow or filled, it really is showing that it's little movement from the open to the close, right? It's not much movement. And the wicks, these longer wicks, indicate that both the buyers and sellers were fighting, but nobody could gain the upper hand. So even though this session, which could be a minute, could be a day, could be a week, whatever candle we're looking at, right? Even though it opened and closed with little change, prices move significantly higher and lower in the meantime, right? Making it a spinning top. Neither buyers nor sellers could gain the upper hand. And the result basically was a standoff. So if this forms during an uptrend, so prices trending up, and this is at the top of an uptrend, this usually means that there aren't many buyers left and a possible reversal in direction could occur. And if you see this at the bottom of a downtrend, this usually means that there aren't many sellers left and a possible reversal in direction could occur. So at an uptrend, then if you see this all of a sudden after big green candles or bullish candles, then a reversal, meaning a downtrend, could start happening. If you're in a downtrend and you see like this after some big red candles, then that means an uptrend could occur. Okay, that's what we mean by reversal. The Maribozu it basically means it's a candle with no wicks or no shadows from the bodies. It's flat top and bottom, right? Now, this means that the open, if it's like a bullish one, the open is equal to the low and the close is equal to the high. If it's a bearish one, the open is equal to the high and the close equals to the low. There is like no wick, right? So this is a very bullish candle. If it's green, if it's no wicks, this is very bullish, and it shows that the buyer's been controlled the entire time of this session of this candle. Okay, and it's usually the first part of a bullish continuation or reversal. So you look to see if it was already going long and it chopped and then disappeared. That's a sign it's going to keep going long. Or if it's at the bottom of a downtrend, then this thing is going to reverse. Okay, the good chance it's going to reverse long. Same thing here, right? This is the same thing. It means that it's very bearish, and it's usually a sign, it's definitely a sign that the sellers control the price the whole time, but it also implies that it will continue selling, or if it's at the top of an uptrend, then this black one means that price is getting ready to drop, and usually it's red on our trading view charts. So the white is green on our trading view charts and the black is red on our trading view charts. So these are very, important candles. When there's no wick or no shadow, that's a strong move. It's coming. The sign that strong move was inside that session, and usually one is coming. Now, doji candlesticks, they basically suggest indecision as well, for buyers and sellers. It doesn't matter what color it is. Neither buyer or sellers were able to gain control. And basically, it's essentially a draw. And there are four types of candlesticks. There's a long-legged, which is like a cross, dragonfly, which is like a T or dragonfly, gravestone, it's like an inverted T to me. And four price means open, low, high, and close is all equal to one, right? It's all equal. So nobody won. And that's basically what you want to think about when you see a doji. Nobody won. And again, if the doji happens at the bottom of a strong downtrend, then a sign of reversal. If it happens at the strong, top of an uptrend, a reversal may be going to happen. Okay. Now we have a pattern when you put the two together, that Maribozu and a doji, right? If it's a white one, you pay attention to any candlestick that precedes the doji, right? So if it forms after a series of candlesticks with like big green bodies, it's signal that the buyers have gotten weak, right? And they are getting exhausted, right? But in order for price to continue rising, you need more buyers. But when you get a cross like this, that's a sign that there aren't any buyers, right? And sellers are looking to come in and take price down. Vice versa, when you have a doji form after a series of bearish candlesticks, right? Or especially when they're Murabozus, right? This is a sign that the sellers are becoming exhausted, because in order for price to continue to get going down or falling, you need more sellers to be pushing it. But if this happens, the sellers are all tapped out and price is getting ready to turn around. It's a very good chance, all right? So this is a strong sign of lack of sellers, and that price may be getting ready to form, or a reversal may be getting ready to form. So quiz time. So fill in the blank. Japanese candlesticks with a long upper shadow, long lower shadow, and small real bodies are called. What was the first type of candlestick? And I told you it doesn't matter what color that candlestick is. Spinning top. Doesn't matter what it is. What matters is where it's at in on the chart, right? Is it an uptrend or downtrend? Is it the bottom? Then it's a sign of reversal or strengthening, weakening, right? Candles that have no shadows from the bodies or wicks, right? Or no shadows or wicks from the bodies, basically, no wicks are called Maribozu, right? Candles that have no shadows from the bodies or no wicks are called Maribozu, right? And they're very strong indications of where price wants to continue going or reverse to, okay? Blank candle suggests indecision or a struggle for dominance between buyers and sellers, like the spinning top, but we're talking about a different type of candle. Very similar to it, though, is a doji candle. Definitely some indecision. It doesn't matter what color it is. What matters is where it's at in the pattern or on the chart, okay? Because it lets you know that there is some weakening taking place. The candle that decreases or closes below its opening, decreasing candle that closes below its opening, is a bearish candlestick. All right, it's the one that decreases, right? And the one that closes or increases or closes above its opening is called a bullish candlestick, right? It's a bullish candle, right? It opens at the bottom and closes at the top. It closes above its opening, right? So that's it for this lesson. Next up is more technical analysis lessons, and specifically you need to go to lesson 3B. All right, guys, thank you for your time, and I'll see you in the classroom. Bye now.